Yes. Turn that nice lady down. Hold on, I want you to hear something. This is, I don't know, a year or two ago.
I'm just trying to help you both mentally, give you courage, show you there's a path, tell you if someone like me can do it, you can do it. And it's not about you becoming Donald Trump or building. I'm not saying that, right? I'm not saying you're going to be Steve Jobs of Apple, but I am saying you could take your business, your time, your talent, your treasure, the shit you've been doing, the things you devote your time and energy into, and store them. That's what investments are. Is you're keeping what's yours. And so as we begin to look at it from just a philosophical view, like the best thing you could do for your business is have money to protect your business. These investments become the money that protect your business, and they evolve, they grow over time, they compound. And so small seeds planted, every day, these small seeds, every week, these small seeds, every month, these small seeds, every year, these small seeds, over a period of, say, 5 years, 3 years, 5 years, 7 years, grows into a pretty nice chunk, man. And one of the universal principles that more attracts more. And so the more you engage in the process, the more you receive, the more you reap, the faster and the exponential your compound growth is.
Oh, man. Let's stop it right there for a second. Oh. Don't shout me down when I'm preaching good. There's a preacher I heard, he used to say that all the time. Don't shout me down when I'm preaching good. What I was just saying there, you got to really drive that through your mind, man. You got to brainwash yourself. You really do. Otherwise, the world will stop it, take it from you. You got to be a little obsessive. Probably should be in trouble a little bit sometimes from it. You carry it too far. It's too far with the shit, man. Can't think of anything to take too far than trying to get rich or make some money. One more thing I think I say right after this. Hold on, this is good.
As we begin to look at this and we begin to look at each investment as a play or as a deal, whatever words you want to use, that give you the opportunity over the next 3 years, 5 years, 7 years. Take a mortgage REIT like Anley Capital, ANGC. This is one that I've personally been buying.
Let's stop there. Oof. So think about what I was saying there. It's almost 2 years ago, man. It's almost 2 years ago, and I'm like, you should buy this mortgage REIT. And then stay in with that, man. That mindset, that day after day after day after day. Like, you get what I'm saying? And when you do that with anything over a long period of time, man, if you just, an hour a day to painting or fuck skateboarding or push anything, man, the way the universe is so ordered, it begins to grow and to expand. The thing about money, though, the thing about investing, and this is the attraction, is that as it builds, it takes on a life of its own. And if you have skill set, and they'll say, well, a lot of people shouldn't manage their own money. True, a lot of people shouldn't, but people that want to get rich could. And you say, well, I don't trust myself. Well, then don't put all of it at risk. Try to get rich with part of it and let somebody else manage the other part. And you say, well, how much? Shit, how much do you believe in you? I mean, you. I know how well I can skateboard. I could tell you things, but at some point I got to get on it and do it, right? So if you can do it. And the beautiful thing about the market is it's fractal. This is the TLT, this 20-year Treasury note bond. This is what they used to refer to as the risk-free investment. If you ran an insurance company, if you ran an endowment fund, if you were just fucking rich and you had money and you want to stay rich, this is why the rich stay rich, because the rich can go to things like bonds and they have so much money that when they put money into the bond, they're getting 20, 30 G's doing nothing. It's not their only investment. It's not their only job. It's not the only way they make money. So when you have 30 coming from here, 10 coming from there, 30 coming from here. And you realize, wow, if I was smart for a long fucking period of time, like 7, 10, 12 fucking years, I mean, all the time, it's shocking the compounding effect that you can have. My friend Mark, if you caught any of that live last night, I know most people are probably busy watching. Those dudes, legitimate, regular people, multimillionaires. They all did it differently, and they all did real estate different than I do it. Same in the stock market. There's people who trade differently. What's happening right here is the bond, the TLT, the 20-year treasury note, is breaking out above the 20-day moving average. Now, is this the bottom? I don't know, but this is what the fuck they look like. Okay? This is what they look like. So as a person of means with money, if I think bonds have bottomed in this little chess game that I'm playing, what would I want to do? I want to buy some, right? Now, let me show you. Now, remember, these are deals. Each one of these are deals. Let me show you something here. I was trying to express this yesterday. If you follow any of my content on YouTube or Instagram, I showed this video of a tiny house. This is the tiny house. I put $18,000 down to acquire this tiny house. It's technically not a tiny house anymore. Originally, it was 400 square feet. They realized that was really small. You can probably see the line in the roof. They added on. And I had to take a lot of the inside apart because it was two dipshits that built it. But together, when you have one dipshit plus another dipshit and you have an actual professional roofer, you can make a property. So it takes two dipshits and a roofer, and you can make a property. There were 4 different carpenters at different times that worked on this, and the guy that did the very best built this. One guy did this, another guy did the center, her third boyfriend did this, a hired guy did this, and I did the porch. 18 grand. I have 37 grand in Uber. One's a house. One's a speculative investment in the future of transportation. They're different, right? But they're deals, and they're deals that require money. And in each of those deals, I have a way or a strategy that I'm looking at. And what's going to make it work is through time, through being consistent and continuously pressing or applying my strategy. This here, if you notice, I'll show you something here. If you come back here, and this is all interconnected. This is what I'm trying to say. This concept of wealth is a formula. It's a math thing. The reason stocks work is the math, man. If there wasn't a compounding element to it, then it doesn't work. So if you look at this house here, 2-bedroom, 1 bath. What does this one say? 2-bedroom, 1 bath. Oh, we got a 3-1, little big. We got a 1-1, so a little outlier, right? 2-1, what do you see? 2-1, 2-1. You think this is fucking random? You think this is accident? That's not accident, right? So the same way when I enter into a stock, what I'm looking for, go back to Welltower. Let me show you this. This is right out of the book. You Don't Have to Die Broke. Wrote it 5 years ago, and I'm telling people, buy Welltower. Never sell it, and add on stage ones. Now, this is in my free book 5 years ago. If we back this up and I say, listen, just buy dips. Why? These guys house old people. It's a business that never goes out of business. You will get old. When you do, this is where you end up. That's the business they're in. It's not Bitcoin. It's not, get it? And it pays a drip, man. You get paid a drip to own this. Where do you think this is going? Up. So every time there's been a scare, COVID, this one was the real scare. This was a buying opportunity of a lifetime. So if we take this back, when did I write the book? 5 years ago. 1, 2, 3, 4, 5. I've owned it since like 2014. And you say, why? Because I met a guy that owned assisted living homes, and the money flow opened my eyes. And since I walk around thinking other people have my money, money is everywhere, I'm allowed to prosper. Please bring me ideas. I'm just looking for deals, right? I got $3,000. Give me something. And I bump into a guy who breaks down the assisted living game. Now that's at 40-something bucks. 5 years later, we're at $97, right? 5 years of dividend collections, 5%. What is that? It's a pretty big return. Is that 400, 500% in a year? No. It's not what that is. But it's one play, right? Now you say, well, how do you know when to take profits in your big game you played? Okay, well, a couple ways. I come over here to tip ranks. Oh, this is all connected. How much is Welltower worth? They say it's worth $98. Morningstar says it's fair valued right now. So literally everyone that audits, looks at the books, and understands business says this company's trading at a basically fair value. Does that mean it can't go up? No, doesn't mean that. It means it's fair value. So if you came over here and I told you, hey, this thing here is now fair value and it's gone straight up for, X number of months, is this a deal? Are you like, ooh, let me in? Probably not. And that's the reason that the up move slows down, is because it's now fair value. And there has to be a real super catalyst to push it past fair value. Like you have to really think it's going to go higher. And then you're looking, and now the dividend yield is not 5%. The dividend yield is 2.5%. So when I started buying it was 5%. Well, the stock has doubled. If you double a 5% dividend yield, it becomes 2.5%. So the early shares I was buying are paying 5, 6, 7, 8, 9% yield. If you buy today, you're getting a 2.5% yield. Do you understand that? You got to understand that. This is part of that millionaire math. Anybody buying this stock today at $97 are getting a 2.5% dividend yield. If you bought it at $45 and let's say the dividend is the same, you're getting paid 5% on your money and you've doubled your money. Right? So you're actually getting paid more. And this is why one guy can be getting a 2% dividend yield, but the guy that's been in the stock 10 years, he's getting 10, 12, 14% dividend yield. It goes up exponentially as you have time in it. So, I wrote about it in the book, Welltower. Forget what page it's on. I've been buying every stage one since. 1 share, 2 shares, 3 shares. And guess what? Your money goes up and up and up. And all through that time, I got people for all kinds of fucking reasons want to sell their stocks. Okay, whatever. Whatever. Flip it, sell it, do that. Or just get rich. That's an option too. Get rich and richer and richer and richer and richer. Okay? This is philosophy, man. Super important, dude. Super important. Super important. If you don't have it, you're going to quit. You'll quit. You won't do the what you got to do. You won't even believe it's possible.
Why? If you have my book, The Money Flow, I trade a chart pattern called the money flow trading system. I don't pretend to know the future. And I think sometimes people think that's what I'm saying. I'm not saying I know the future. I'm saying I know what bottoms look like and I know what tops look like, except sometimes it's not the bottom. It's just a bottom.
So that's this pattern right here, right? And so even as I watch stocks go through that pattern, what the pattern is telling me is it's giving me a logical, repeatable way to accumulate assets in the stock market. And I don't know the bottom and the top, and I don't know if this is the top, but I know what tops look like, and I know what bottoms look like, and I know what fair value is, because there are people went to fucking college to know that. They know how to evaluate a company, and they can look at it and tell you this is undervalued or valued. That doesn't mean it's going to go up or down either. But I can take the chart pattern with the combination of fundamental analysis and the combination of a philosophical fucking philosophy and apply it every day, pushing for it every day. I apply it every day. And So if I'm looking at this and I'm up 50, 60% and I'm getting a drip, well, shit, let me sell 10 shares. What could I buy? Look at this. It's going the other way. It's below the 200. What is this stock? Mattel. Or Hasbro, excuse me. I was looking at Mattel just a second ago. Now, we're going to have Christmas coming up. And you're going to hear talk about the Christmas trade. That'll include Walmart. That'll include Target. That'll include Kohl's. What is it going to include? What is it going to include? What are you going to do? Wait till it's Christmas? I'll wait till Christmas and do that. No, man. You got to get ahead of the shit. So going into that, what am I looking for? I want to find some undervalued companies that maybe could prosper in this coming year here. Let's see. What is Hasbro worth? $108, 30% upside. And then I look, pays a 3.5% dividend yield. Whoa. That's more than the 2.5 of Welltower. And Welltower's fair valued, and I'm up 50%, and the RSI is 76. The exact opposite of this stock. Now, I could take some of my gains, right? And I want to invest them in what I think will have a higher potential upside than just sitting in Welltower. Now, I don't want to get out of Welltower. They could expand their multiple. They might increase their dividend. They might do, let them come down a little bit. Good. Over time, I'm going to build out that position. But if I can snag, let's reward myself. Let's take 5% off the table. And I'm also in VTR. If you remember when I got into this mortgage, these assisted living, I got about 40 G's in this. But that's 5 years of putting money into assisted living homes on stage ones. Right? So maybe I could pull it back. Let's take 5% of that, chop it, and let's add a new stock, new sector. Pays in dividend, pays a little higher than I can get right now. Even though on that money I'm actually getting higher than the posted because I've owned it for a while, right? You realize that every time you get a dividend, your money in the deal goes down. So if you put $5,000 in this deal, every time you get a dividend, you actually have less money in it if you were to put that money in your pocket. So if the dividend's $100 and you put it in your pocket, you now only got $4,900 in the deal. And what if they give you another 100? Well, technically you've gotten $200 back, so now you only have $4,800 in the deal. And as you go forward, every time they pay you, you have less money in the deal. Now, if you were to take the amount of less money versus the dividend payment that you're going to get next time, right? Your yield actually goes up as your money comes out. Bet no one's ever told you that. See, if I put $5,000 in and you give me $5,000 back, I now still own the $5,000, the deal and the money coming, but I got my money back. That's the same thing they do in houses, guys. Right? This is so important. It's so much bigger than stocks, man. Everybody with their fucking missed the whole big picture of how you get rich. This is how you get rich, man. Not fucking trading's great. I love trading. But trading's not how you get rich. This, I mean, you could use it to get rich. Let me misspeak. And then if you can, do it. But I'm showing you a way for sure. That was $89, 89 grand. I put 18,000 down, okay? I got to fix it up. I now got it rented since 2018. Over here it's showing 800, but actually it's 900. And it's being rented, right? Well, my cash flow is like $214. So every month, my 18 grand goes down by $214. That's 2,000 something a year. Well, if we add the loan pay down and the property price increase, how long until I have no money in the deal? Like, I would get all my money back. And then you go infinite. All your money's back and you still own it and it's still growing. Same in the stock market. Exact same. You say, what do you mean? Take Exxon. No, let's get Conoco. I'm up 102%. So if I sell half, I get all my money back. Right? How much do I got in the deal now? None. I got my dollar amount back. I got less shares, but I got my money back. What could I do with it? Go buy another one? Or leave it? I can leave it in Conoco, right? Well, what can I do with the equity? I can leave it, right? I can leave the equity in there. Or what? I could pull it out. Well, to pull it out in the stock market, you got to sell the stock. To pull it out here, you could sell the house, or I don't know why you would. You could borrow against it, right? So you raise your rent. Year or two later, rent goes up 100, 150 bucks. Well, shit, you can borrow a lot of money on 100, 150 bucks. So you go to the bank, say, hey, could I get like my 20 back? And they go, yeah, your mortgage is going to go up about 100 bucks, 150 bucks. All right. I raised the rent. I'm not paying it. Now I own the asset, the cash flow, and I got my money back. And I get to do what? Go do it again. And that is a deal. That's what you call a deal, dude. And as you learn the money code, where's the next deal? There's one. Where's my next deal? There's one. Where's the next deal? There's one, right? Or there's one. There's one. Right? We've been talking about mortgage REITs. AG&C fell to a state. When do I want to be a buyer? Well, main times is when the RSI is extreme. Hello. Hello. Right? And what am I looking for? The money flow pattern, right? I want it to stop, put in an anchor point, and start to go sideways, right? That right there. What about on these other deals? What am I looking for? 2 bedroom, 1 bath, 700, 800, 900 square feet. I filter it down. So I'm not confused. I know what I'm looking at. Same thing here. If I get, now I put 18 grand into this, we said, right? And into that other property. I put 18 grand right here. Plus another 5, 7,000, 10,000 fixing it up. I don't remember exactly, right? How much is that? 18 plus, that's 28,000. If you got $28,000 in AG&C, what is it? $13 a share. You're buying that today. Means 1,000 shares would be $1,300. 2,000 shares would be $26,000, right? What would your dividend be? A little over 200 bucks. What do you do for it? Nothing. Now here's what gets people fucked up. The balance price of this going up and down, they think that somehow affects them. Meaning, if you own this and you buy some here, and it goes to here, and then back to here, and then back up here, and then back to here, and then back up here, and then back to here. See, when the guy who first gets in, he thinks that back and forth, that up and down does something. No, it's just giving you the opportunities to build over time, right? Now, these type of stocks are different. AG&C isn't a growing business. It's not. This is, look, if you go look at the chart of this, it is not going to look like Welltower. And you'll say, what do you mean? Watch. The price it is now, 12 bucks, is basically the price it was in 2000, what is that, 14? Dude, 8 years is basically the same price. That's mortgage REITs. Mortgage REITs, that's why they give 10% yields. If something has a 10% yield, it's not fucking growing. It's not going up. It's just throwing off money. So when you take a property like this right here, this is a tiny house, bro. It's never going to be $500,000. I mean, maybe in the way out future. This is not growing at 20, 30, 40% a year. It might pop, right? But this is not an oceanside villa, okay? This is trading in, this is a different product that you're playing with here. So is this. This is not a growth stock, right? This is not going to grow like a business will grow. If you go look at, say, just pick one, shit, Johnson & Johnson, fuck, I don't know. I don't even own the damn thing. Let's see. Back it up to a monthly. That's different, right? It's different. Why? It's growing. Look, I just randomly, I don't even own this shit. This is why index fund works, man. Because the general stock market most stocks, the top 500, I'm not talking about some obscure shit, but just the general blue chip normal company. There's hundreds of these. This is not complicated. You could pick the index of each of the 11 sectors of the S&P 500. You could do the same for Bitcoin. You could just buy the top 10 coins. Stop trying to be a fucking brainiac and just go with what works. And when Bitcoin goes up, they go up. It's not rocket science, okay? Index fund investing works. What people who are trying to beat indexes are trying to do is pick the underlying stocks that they think will go up bigger than the stock market. So the idea when people say, well, picking stocks, you can't beat the stock market. Listen, but you can very fucking easily tie it. If you just buy the top couple hundred, you're going to go up with the stock market. So what if inside of that small group, you're attempting to pick the ones that you think will outperform? Even if you pick them wrong, you're going up with the stock market, man. You say, what do you mean? I don't know. Let's look at Pepsi. Look at it on a monthly. Look. I mean, I can just go fucking random stock after stock after stock. It's going to go up. That's 12, 15 years. Unless your individual company fucks up, messes up, something goes wrong. And then often inside of that, all it did was give you an opportunity to capitalize on it. Like a cigarette stock all of a sudden has what? Some sort of legal something, right? What is this on a daily? Well, this is a daily. So following the money flow, and I've been teaching it for a long time. Let's follow the money flow. What if we just add to our cigarette stocks on stage ones? We don't really put a lot of effort into it. This is just kind of when we start adding money, right? And I just, as a general rule, I own these. They pay a lot of dividends, so I buy some there, and then it went up and came down. All right, whatever. And then I bought some there. There's stage one. Then it went up, and then it came down. All right, whatever. And I buy some here. What? Now we're way up here, right? We're way up here. And so if I go, look, what is this stock worth? MO. $52. What's it trading at? $52. When's the money flow say you should be buying it? Definitely below the 200 and definitely at $42. You say, but things didn't look good then, Gerald. Like it wasn't smart, didn't make intellectual sense. There were a lot of fucking troubles. I know. Thank you. My assistant brought me coffee. You say, but Gerald, wouldn't you have had to know a lot of things about stocks? And wouldn't you have had to know a lot about the cigarette business? And wouldn't you need to know all of these things? And don't you need to know about... No, not really. You just own the stock because it's top in its sector and you add on stage ones. And when it gets to true value, I'd start taking some down because you're going to have a bunch of fucking gains. And I would take that and I'd go put it in the same quality stocks trading below the 200 underneath there, applying money flow rules. Oh my God. Let's go back to my favorite speaker.
Goes down, does a bottom, starts to go up, goes down, does a bottom, starts to go up.
This was 2 years ago.
And I'll buy every bottom if I have the belief or the courage that this is a quality
or 1 year
product.
ago.
And I don't have to participate in every time, man. So in other words, I could have money invested in the oil sector, say in the XLE, pays a dividend, Exxon, 5% dividend, Chevron pays a dividend, Conoco, Phillips.
August 31st, 2001. Where's Exxon? I just said you should buy every stage one of Exxon. What a stupid thing to say. Let's see. Let's go back to August of 2001. Where are we at on Exxon? Oh, it's not that bad. Let's see. 2001. August. Oh, look at that. $50. What am I saying there? I'm literally saying in this video, all I'm going to do is buy stage ones. I'm going to hold this asset. I'm going to compound the dividends. Okay. August 2001 in a random fucking YouTube video. I'm telling you that I'm doing this pattern, and I'm collecting those dividends, and every time they pay me a dividend, the money I have in this deal goes down and down, and my yield goes higher because you gave me my money back. So if I do a deal with you and I say, here's $100, you're going to pay me $1 every month for borrowing that, and you say, cool, and you give me $1, I now only have $99 invested in the risk for you. And then you give me $1, I now have $98 at risk for you. I'm still getting the same dollar from you, but I only have $98 in the deal. You hand me another $1. Now I have $97 in the risk with you, but you still owe me $1. And each time it goes down, my return goes up and up and up exponentially. And this is something people don't talk about. I doubt you know this.
So these things are throwing you off some scratch, man. $100, $50, $200. I only want to buy these when I think they're on sale. And when they're not on sale, I just own them. They're just assets. They're just things I own that appreciate, that produce cash flow. When that cash flow comes in, I set it to drip and buy more shares, which does what? Compounds. And each quarter, I get some more shares as we go forward. There's 4 quarters in a year. We go through, say, 4 years. That's 8 quarters. That's all these shares you've gotten for free. The actual cash flow and the amount of the dividends and the income you're receiving has exponentially grown. And some of those shares you bought lower. So the balance has grown. And you can have stocks, and if you do this over years and years and years, you could be up 2, 3, 4, 500% over time. Over time. But sometimes, guess what? You may start, like I just started adding PayPal. Now, I don't think, PayPal's does not pay a dividend, but I do.
All right. Hold on. All right. Now, in this video, I randomly talk about Exxon. So if we look at Exxon, these are dividend payments, little drips, just in the E-Trade. They paid me 5.08 shares right there, right? $420. That dividend payment is up 87%. So the payment value, because I didn't put it in my pocket, because I had it go buy more, that payment doubled. Okay? So now these are buys. So you see where I bought 5 shares, 5 shares, 5 shares, 5 shares, 5 shares, 5 shares, 5 shares. So this is just years with Exxon. I bought 4 shares. I bought 4 shares. I bought 3 shares, 3 shares, 2 shares, all the way. Like here's where I bought 1 share, right? Just stacking them. So these are dividend payments. This is where they pay me shares. Now all these are going up because they're doing it automatically. So when this stock is down, right, bam, you're getting shares. And you say, well, that doesn't work with all of them. It does work with a lot of them, man. So let's see. So one I'm underwater on right now, AT&T. You're going to see a lot of red here. Now you're starting to see some click in. Why? Because guess what I'm doing? I'm adding on these low points, 6 shares, 3 shares, 2 shares, 1 share, getting dividend payments. Why? Because in 3 to 5 years, it's going to be a lot of fucking money. I'm just playing it. And then sometimes I'm buying shares with something that ran up, remember? So I trimmed Exxon, right? And I started buying. So look, in this account, up 88% in ConocoPhillips. That's turning, in this account here, 5 into 11. Now I can downsize that, right? Put that into what? Put it into other things, man. Freeport McMoran, 614%. The point being, what makes this work is doing this over time with a basic formula of what is the value of a stock. When people ask me all the time about want to get into real estate, I'm like, well, do you understand the value? And if you're in the rental game, it's not about the house. That's not the value. That you're not fucking paying that. Someone else is buying the house. So when people say, well, the price is too high, you don't know that, man, because we're not paying that price. We're putting down a percentage of it. So this was 90,000. Okay, 90, 100, 70, 120. Who gives a fuck? How much is the rent? I need to know that. What can I rent it for? So when I'm looking at a stock, it's what is the true value of the stock? And the same on a house. What is the value of this house? But if it's a rental house, it is what is the value of the money that it's going to give me? So I just bought one for $312,000 that'll produce $40,000 a year in gross revenue. Well, those numbers work. So it doesn't matter because this I paid $89,000, the other one I paid $312,000. What I'm buying is the income stream. I don't care what the actual value of the home is as long as it's sustainable, meaning I can get the rent that'll cover the note, cover the mortgage, cover the taxes, and put money in my pocket. And then over time, over the next 3 to 5 years, I'm going to make hundreds of thousands of dollars on every single deal. That's what's going to happen. So every time you want $100,000, you go pick one up. Yeah, I'd like another 100, please. Yeah, cool, thanks. Well, when are you going to get your 100? In 3 to 5 years. Cool. Well, what should we do in the meantime? Let's buy a bunch of them. What are we waiting on? I don't know why we wait. Why you want to wait on $100,000? Don't you want $100,000 in 5 years? You say, yeah. Well, guess what? How about the year after that? Would you like another 100? What about the year after that? Would you like another 100? How about the year after that? Well, the way you do that is you get that shit going today. Right? That's how you do that, man. So the way you get the dividend thing going is you start today. Like you start doing it. It's simple as that, man. Chris, did you just fucked up my whole speech there, bro, with that question. It's called trimming, man. If you put 10 grand into Exxon, sir, and it goes up to 12, let's say it goes, your value of your shares are now 20. You could sell 10%, harvest a nice gain. You do that in 2 other stocks. You now got $6,000. It's profit money. And you start a new position in an undervalued fucking stock. And so you're rolling long held, overvalued or fair valued assets. You're just taking some down. You're reaping the reward of you buying before when it was cheaper. And these stocks will go from overvalued, undervalued, overvalued, undervalued. It has nothing to do with the fucking price of the stock. This is what people don't understand. The value of this home is not the price, guys. The price is going to go fucking higher and fucking higher and higher. Your kids will pay a shit ton more for this house than you could pay. Even if right now you think it's overpriced, in 20 years it will be higher. Doesn't care that you think it's overpriced. Nobody cares what you think the price of oil is high or low. It has nothing to do with the price. So in 10 years from now, everything that you thought was, oh, that's expensive, will be more fucking expensive. Let me let you know a secret. So in other words, the price isn't what you're playing. The price isn't what you're playing. It's what is the future value and what is the cash flows, or what is the appreciation of the stock and what is the cash flows. Right? You think stuff stops appreciating because you can't afford it? Really? You might want to look at the price of a fucking 1970 Lambo. You say, well, it's $450,000. Nobody can afford that. Well, let me tell you what it'll be in 10 years. A price that no one can still afford. Talking to my buddy the other day, and he's like, God damn, 2008, look what they paid. They want me to pay this? I'm like, bro, you don't live in 2008. You don't get those prices. You live here today. So if you want to buy this 5.5% dividend yield, it's $52. That's the price. Right? So what I want to do is look, put in work, read, research. This is what Buffett does all day, guys. He thinks, looks, reads, and researches. He doesn't want to buy shit overvalued as a general rule, unless he thinks it has more upside to it. He wants to buy shit that the market has missed, or there's some sort of arbitrage or some sort of future breakout, right? Or break off. Like Pepsi and Frito-Lay may break one day, which would unlock huge amounts of value in that stock, right? Yeah, Berkshire is going to go higher. It'll keep going higher. a lot of these stocks have done stock splits, reversals. Like that's why the price shows. Coca-Cola would be 50 fucking grand right now if they would stop splitting the shares. Look at, and let me give you an example. Remember they did a stock split and it went back to 1,000. They'll do another one. It'll go back to 1,000. They'll do another one. It'll go back to 1,000. Pepsi's been doing that. McDonald's has been doing that. Pepsi, like they all at some point that's what they do, man, because the value. And as the companies take the shares down, and if profits grow and the shares come down or sectors get hot. Now some of these don't do that. When you're looking at a REIT doesn't do that. The only way a REIT grows is because they're giving you all of the value of the stock. They're not investing it back in. They're giving it to you, the shareholder, Now, people may value that income stream, and then it may go up and up and up, and they can increase their size through balance sheet. But if you look at a company like Anley Capital, which has grown massive, look at the price. I mean, it's $6.99. What? Fuck, 10 years ago. 10 years ago, it's fucking $5. Share price increase is what? $1. The price of this stock has gone up $1, guys. So where's the money come from? We'll go put it in. Anley Capital's grown, 10, 20% a year some years. Got a little fucked up here during COVID. But if you go look, this thing's returning 10, 15, 20% a year. And you do nothing. So if you got $1 million in there, you're getting 100 grand a year doing fucking nothing. No phone calls, nothing. This is how rich stay rich, is they put shit tons of money in these assets that throw off money. And if they're getting money from the asset, they can spend that money and they always keep the asset, man. They're not moving in and out, in and out, in and out, in and out like crack babies. That's not what they're doing. They're accumulating very valuable shit and holding it for a fucking long time. And when the price gets absurd, they sell into that. When the price gets absurd to the bottom, they buy into that. And they just sit back and watch, and they have enough money and enough assets that they don't have to respond. I don't have to do anything. And like you said with Exxon, isn't the goal to grow it larger and larger? Yeah. And I could just sit on it. I could go, I realize it's expensive. Mona Lisa's expensive. I'm going to hang it in my living room. What if the price drops? I don't give a fuck. You could do that. So if you've got 300 shares of Exxon, but see, you're thinking the stock. I'm thinking portfolio management. Can I increase my yield? I'm playing money to make money with money game. So yeah, I want to keep some Exxon, but if I can take from that and go buy 4 or 5% accidental yield, a company like 3M that rarely pays a 5% dividend yield, has fallen to a level that it is. Why don't I take some of those gains from the oil sector where we added to the positions in the down to move them into shit that accidentally is paying high yield? 3M, Gilead, right? And how big are these deals? I don't know. Whatever size you can afford. Most of mine now are I try to get to 2-3 grand as fast as I can, and then it usually runs on me, and then I want to get it to 5 as fast as I can. Then the goal is to get it to 10, and now I'm trying to push some to 20. And when I trim them, the trims are 2, 3, 4 grand, which then allows those new positions to start off now at 2, get them to 4 or 5 faster. And as you're growing forward and those dividends are coming in, you're allocating them to these positions, it grows exponentially, man. You say, what do you mean? Exactly what I show here. So when I own one, say I own this one, my rent collection's what, 800. Well, what if I own that one, this one, that one, this one, and that one? How much is my rent collection? A lot more. And what if I don't need the money? If I don't need the money on this day and it's that much, so that's what, 4 or 5 grand? That's living, that's different than the guy here, right? So the guy here with one, he gets his little 800. I get my little 4,500 and I don't need it. And what if I invest that? How long until that shit is, that's how your positions get bigger and bigger. And you go from a small house to now buying beach houses through the roll up, man. And that's in 5, 6, 7 year cycles. Yeah, man. I'm getting fucking fired up now. Let's watch this for a minute more and we'll close it up. I'll tell you what stock I'm adding to right now.
The price will appreciate over time as the company continues to grow, as they expand revenues. Over time, stocks go up. And as this stock goes up, I'll be able to make a decision higher. Well, the money flow allows me a way to systematically, a blueprint, a path, a way to do that. And so that's just one of the tools, one of the assets that I figured out along the way as I'm trying to pursue wealth or be an investor or be a person that makes money with money as a side business. So if I work at Walmart, right, I want to what? Take my money and invest my money. If I own Walmart, I want to what? Take my money and invest my money. Why is that process excluded to the poor, but encouraged to the rich? Did anybody in high school say, hey, this is how you compound your money? Hey, this is how you buy commercial real estate. Hey, this is how you buy a storage facility. Hey, this is how you invest in Amazon. Hey, this is how you invest in Square or PayPal or Venmo or Cash App. Can you invest in those yet? Right? Those are early placements. Now, I don't do any of that, but it's possible. The rich get to. The rich get to seed these businesses, right? But they have a working philosophy that you can take money and invest money, double money, triple money, quadruple money. So in my story on Instagram, I showed a house that I bought. I put $13,000 down. $13,243, I believe it was. I put that money down. And then I took myself and I painted it.
Anyway, it stays the same, right? Next day, I get a chance to grow it a little bit, add to it a little bit, push a little bit more, harvest a little here, add to a drip there, collect one here, right? Just this big chessboard. So something I added to this morning, TMF. TMF is the triple leveraged of the TLT, 20-year Treasury bond. Very unpopular trade, makes me like it. People make all kinds of intellectual reasons why you shouldn't do this. Good. That's why it'll work. So target obviously is back up here at the 200 range. The reversion to the mean. It could go up to there and still go its dreary self back down. So I'll be looking to downsize these bonds up into this 143 range. So I've been adding on stage ones. I added over here too, be fair, and over here too. I think I'll have a little time to get a little more in, and then I'll probably be looking to downsize it up into here to probably roll that, I don't know, we'll see, maybe into the market. That's TMF. Where's the UPRO? All right, market's still in stage 2. Everybody got scared or thought it wasn't or took profits. Chumps. That's all I can say. Bunch of chumps. Yeah, you might have called that your first target. Yeah, it is. It is. Still a chump. I would have waited. I did wait. We don't want to trade scared. So stage 1 buy, stage 1 buy, stage 1 buy. And now we're, boom. So definitely whenever you get the S&P 500 way below the 200-day moving average, this trade back to the 200. Now, if you were trading that, the bread and butter, that's trade execution. You won, take your money and go. If you were doing a regular swing trade, this is probably your first target, and up here's your second target, and we're waiting on the RSI. The RSI tells us we have plenty of more room to the upside. Stock market's going higher. And I'll believe that until it doesn't. And if you believe something different, then you don't trade the money flow, right? Because I believe in the signal until it isn't. I'm not looking for a reason to get out of it. And people do that to me all the time. What about that? Dude, I don't give a fuck about that. We're in a stage 2 breakout. Shut up. Stage 2 breakout. And look where it stopped, previous high. So the rules of money flow is that wherever price has been before, that's where it'll go again. Previous high, price stops. Does it stop forever? I don't know. But that's how you create support and resistance lines, right? A lot of strategies use them. Set some standards for yourself, man. And keep them. That's hard, man. So there it stopped. I think we'll build out here, and then it'll run higher, and we're going to get up in here. Right up in here. Everybody that's negative on the stock market are dummies. That's the polite word for it. Market's going higher. I had that little run-in with that influencer, and he's like, well, we don't know if it's the bottom. I was like, yeah, we do. It was the bottom. It was a stage 1. Now it's breaking out, going up, might go into a 3. I don't know what he's looking at to be a top or bottom. Like, it was the bottom. That means the bottom. So, yeah, it was the bottom. And now we're up here. So that's the bottom. And we'll keep going, and maybe it'll come back down. Maybe it'll make another bottom. And you say, what do you mean? These are bottoms, dude. Right? That's a bottom. There's a bottom. There's a bottom. There's a bottom. Okay? Playing the game that you think you know, it's which one. Come on. Stop. Stop. You don't. So this was a bottom, and that's how we treat it. And there's a stage 1 buy, and there's a stage 2 breakout. Everyone disagrees with me. I don't give a shit. And I will tell them that. You're wrong. There's first target. There's second target. There's nothing else for me. Nothing. So nothing. There's nothing else I need to look at. Nothing. Is the asset undervalued, overvalued? Where's it at on the value scale if it's a stock? Where's it at on the true value scale inside of the money flow? That's it. You know, but people let all kinds of bullshit creep in on that, man. What do I think of holding FE for 30 years? I think your question is dumb. I would think of everything in 7 to 10 years, 30 years. Nobody knows, man. Could you hold it? Yeah, the past suggests you could hold it, but I don't know what that means. It might not. There might be a nuclear war. You don't get a chance to hold it for 30 years. But do I think you can? It is a core position inside of my portfolio. And if you go to the Peters report and go to page 18, you'll see all this. I have zero intention of selling any of them. And if they go on bad times, I'm usually looking to accumulate more shares. That's just the way I live. You could give me a million reasons why Ford was shitty, why Exxon was shitty, and then they were the best stocks in the stock market. So once I put them in there, it's kind of a marriage, you know. I mean, I've rarely pull one out once I put it in there, which means I take a lot of consideration before adding. So one of the newest stocks I've added has been Hasbro, which most of you aren't intellectually smart enough to understand the trade. Hasbro, and it will go a lot fucking higher. And I'll come on here and say, I told you so. Hasbro is one we've added, and PFF is one we've added, right? I don't add often. I usually won't add or recommend into the buy and hold maybe once every quarter. Maybe not this quarter. Maybe 2 in 1 quarter, and then I don't again. It's not a daily thing. These aren't trades. So once it goes in, I'm with it forever. Like, that's my intention, just to die with them. That's not trading. So that's a separate account. You got to separate in your mind swing trading versus option. So I have an account for options and triple leverage and all that shit goes in one account. And then I have my position trades in another account. No leverage on it. These are position trades. I can't blow out. This is my largest trading is in position trades. And then 75% of my money is held in buy and hold dividend stocks that I have no intention of selling. And if they go on bad times, I'm looking to accumulate. And I'm using the money flow pattern to do that. And life is simple financially when you start to do that. There's no stressing. There's no worry. All this shit I see people doing is like, what are you doing? Like, conviction, man. And that's the point of shit like YouTube and books and courses. You got to drill it in your head. So PFF, why did I buy this? Trading way below the 200. It likes to trade up here in the 38. It pays monthly dividend, solid 4.5% dividend. This is just cheap right now because everything got pushed down because of interest rates. So good. You guys want to push them down? This was one we were into. YYY pays a 7% yearly dividend. This is going up because the price got too cheap, right? And the first alert that price is too cheap is the RSI. Not always, but it's first alert, right? What else is an alert? It went below the 200, below that yellow line. Now what can do? We can go to tip ranks. We can go investigate. We can do the work and see, is this undervalued? And you say, well, yeah, why? Well, maybe they have a major component part and there's been sanctions or a block and it makes fucking sense. Okay, cool. I get it. So now all the weekends have given me an opportunity to what? Buy stage ones, man. I buy a few shares. I buy a few shares. I buy a few shares. And right in here, this is where I'll have people get all weirded out. And I'm like, dude, did you just fucking fall off the turnip truck? Like you just walked into this game. Like, relax. Can we do what we were doing before you got here, before you pee yourself or start crying? Like, can the rest of the world keep doing what it's been doing before you got here? People were like in a panic because growth stocks went down. I was like, you don't watch history? You don't know that can happen? You didn't know when the federal was like, that's, dude, these cycles of oil and the government getting mad and trying to stop the price, and then it'll come down. And then, like, this shit is long before me and you got in here, they were playing this game. Long before me and you got in here, there were companies paying dividends, and there were, railroad stocks and all this shit. There's nothing new, man. Exxon were the growth tech stocks of their day. People think tech is somehow using nothing new about it. Kellogg's was a fucking growth stock when they first started figuring out how to can food, mass produce it, and ship it. That was Roku, man. Like, they were like, wow, you can ship chicken to someone over here. Like, all stocks start as growth plays, man. If not all stocks, but I mean, a lot of the ones you see today, the boring ones were, IBM was, a growth stock. So was Intel, right? And then guess what? They're still around. They're still creating money. And if you've owned Intel for 20 years, you have a shit ton of money. That's just the way it works, man. GP, you ever check out this way? A shipping company dragged his dividend 20. Woo! Now that scares me. They could maintain that. SBLK. I'm not a big fan of the shipping sector. There's a lot of mismanagement of the businesses. It's undervalued by 20%. SBLK, let's look at that. If I bought some here, I wouldn't buy much. Why? It's a stage 3. Could break out again because it is undervalued, so we got to recognize that. My buy zones were here, here, and here. I mean, that's what they look like, right? That's what I'm looking for. I like the pattern here, though. You can see the money flow pattern in it. See it? Even in these little ones, you can see the pattern. You see that? Hope you can see it, the pattern, right? Price movement. It's not going perfect with the moving averages. Sometimes they don't, man. And that's why learning the money flow, living inside of the money flow, is you watch the money flow. That's what it means. Boom, 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 boom. The moving averages, it could be a fucking 17 or 10. That's not the point. The point is helping you with a scope. So really, this is the pattern, right? Everything else that we're using is just to help us see it, man. So if I was to come over here, you got to, that's chart reading, man. You got to get my course on that. We take this on the deep end. This is a religion, man. Can you see the money flow, man? I see them. I just open it up and I look at them and I go, First thing my mind looks for is the boxes, right? So then that makes me want to kind of connect the lines, right? I start doing them. They're not perfect, but I'm seeing them. And sometimes they draw out perfect. So if I'm in the money flow and I'm looking at this, right now I know this is either a 3 or could it be a new 1 setting up to rip? In order for me to believe this could be a 1, a stage 1, when you say, what do you mean? Meaning it went from 1 to 2 to 3, and then it didn't drop. It didn't go down. It stayed into a 3, and the 3 turns into a 1. You say, well, what has to happen for that to happen? The same effect that you get on the stage 1, moving averages go sideways, RSI starts coming down, it often goes flat, the moving averages, meaning it looks visually like a stage 1, but yet it's coming off of a 2. So it's a 3 that's morphed into a 1. Almost always this happens when there's plenty more upside. So there's people digesting this move. There's momentum traders, short traders, position traders. They're moving up and they're taking some of their gains, and that's what you're seeing. But there's enough buyers that it doesn't drop. And so we don't go into distribution. We stay in accumulation phase. We stay over here. That 3 becomes a 1 and people keep buying. They're like, nah, man, there's more in this. There's more in this. And you come over here and you're like, okay, well, I can make a fundamental case. $36 is fair value. Now I got to go say, well, where's the general stock market right now? Where's the wind? Where's the wind? Is it blowing in our favor? Where's the SPY? So I go look at the SPY, right? This is exactly what I would do. And I go, all right. SPY's pull back. That could account for some of the sideways movement I'm getting in the shipping thing, right? Right, low question here and there. Okay. But that's still bullish. It's going up. It's above the 20. Of course, it's pulling back. It almost hit a 70 RSI, hit a previous high. That's fucking money flow. It's supposed to pull back. So what we expect is it what? It's probably going to go sideways here before ripping higher. Where's the next target? 472. And you might say, well, why don't you be bearish? Because it's bullish. So that's already been decided for me. I don't need to spend any time on anything else. Everything else I read is stupid. It's going up until it doesn't. And then I'll say, looks like it's going down. And what? Game changes. Right? Right now it's going up. So yeah, man, I might buy on that. I might nibble on that. I'm not a big fan of the bulk shippers, but that's how I would evaluate it. And then I would ask myself, is everything I just explained gonna go higher than Bitcoin? Oh, you guys not buying Bitcoin are foolish. Let's see. When Bitcoin's really high, I'm gonna fucking turn off my Instagram account. My last post will say, told you so. It'll be big Bitcoin, and that'll be it. I'll shut it down. Let's see. Gerbert, the world, I have a question. Well, ask your question, sir. We're all waiting with strong excitement and curiosity of what your question could be. I'm sure it'll just be awesome, sir. What is your question, sir? Give us a question. Make it a good one, too. I don't know. You look like a guy that uses a lot of product. I don't use product, so I can't help you there with lotions or hair gels. I don't know anything about that. I actually don't even comb my hair, so I won't be able to help you with any of that. Where to get your nails done, none of those things. I have no information on manscaping stuff or how to do. I really can't help you at all. But what is your money question? Oh, well, sir, so far your question is really boring since you didn't ask it. He wanted to ask me about if I thought it was not as masculine to go with your girl and get your nails done and stuff. I think it's okay, bro. I won't judge you for it. I think it makes you soft. But I won't judge you. Every male out there should go buy an Oculus and download the fucking Jedi sword fighting game and sharpen your sword skills. Because I recently did this and it is awesome. And now I can fight with a sword. And I've always wanted to do that. When will you quit trading, G? When I die. When I die, they're going to take my account. And I've been thinking about that too. When I die, it just goes away. I'm not leaving it to any family. I'm not leaving it to friends. I'm not leaving them shit. And I was thinking that I think I'm going to leave it to Uber. I'm going to leave it to whatever stock made me the most money. I'm going to leave it to them. Let's see. That's Bitcoin. I can't buy here. If you don't own any Bitcoin, I would be a buyer of Bitcoin. Let's see. I was going to check on Dashcoin. Yeah, man. Crypto's going higher. Pick a random follower. Are you crazy? Give my money to some lazy ass on Instagram that fucking posts vacation pictures all day. I'd rather fucking give it to the government. Let's see. I was going to go... Where was that guy's name? What about what? Make the money flow, Nation Trust. Let's see. No, I'm going to pick a squirrel or a rabbit from YouTube and give it to them. Let's see. Oh yeah, let's check in on DS is one that we've been accumulating. Man, I'm cool adding to this. I really think DS wants to go higher. I got a $5 target on it. I think anything under 150 still buy zone. I mean, I know we were buying it down here, but it hasn't broke out. It could easily go up here. Just right now, the headwind is pulling back. And I think when the SPY remakes its move, you're going to see DS rip higher. So this is all part of the game plan, man. All part of the game plan. He says, how long have you traded for? Well, I was trading yesterday, and I'm still trading today. I've been trading every day since yesterday. Here's another one I'm researching right now. I've been in business for decades. GP. Oh, man. This ain't the nutritional company, is it? Come on, man. Oh, genuine parts. All right. All right. It's getting exciting now coming under that 200. Any of these stage ones, if you're following the money flow, under a 200-day moving average is where you want to be. You're in bingo. I'm in a little bit of bingo too. BNGO. I like that GPC. Yeah, nothing to do here. Let it go. What do you mean, what about it? I wouldn't buy any here. Your buy, this was your last day to buy. This is the breakout. Right there. That's when you should have bought. That should have been your, that's it. I'm done buying. And then let it go. Where's your target? Right around here. So you still got a little bit more. Either wait for that RSI or it hits up here in the 310, 325 range. Some of you guys probably got scared and already sold it. That'd be a punk move. I'm in Nike, man. I think for Lululemon, you should just stick to wearing the pants, sir. Let's see it. I wouldn't buy the stock. Just keep wearing the pants. Nobody thinks you're weird. Stock looks good, though. It's moving up. I'm long Nike. I'm not long Lulu. Just wear the pants, sir. A real man would just wear yoga pants every day. Just wear them to work. Just wear yoga pants. How much are you in real gold and silver? Almost none. Got a little bit in a trade, and that's it. There's no reason to own gold. I know if you like to read books or YouTube conspiracy theories, there's a lot of reasons to own gold. But the real reason isn't much. It really has been a horrible asset for the last 20 years. It's even dumber as we go forward in a world where, what are you going to do? Put it in a wheelbarrow and take it? I mean, you can't even protect yourself from it. Throughout history, governments have seized it. Like, it's just not what people pitch it as. You ever heard some shit company called IDEX? Those Twitters are investing in it. My neighbor put 10K and it was I've traded around IDEX. It's a car company. It's popping. Yeah, penny stock. IDEX will rip when it gets going, but none of these are ripping right now. They're still in the doghouse. All these penny stocks, man. Solo. BRT is a good buy right now. I mean, not right now. Was a good buy. We were buying here. It's come up 40%. I put this out on Twitter. This was a good buy. Almost a 5% dividend yield. Now it's moving higher. So we should see it go. Doc says Kosk is still a buy. Let's see. Yep. Look at that big, long stage, man. This is a big, that tells me that's a stage one. You got VTR. Nice. You can trade around via index. Just trade around it, man. Trade around it. Just don't get too heavy in it. I'm still in it. Yeah, man, that's it. I got to go do some work. But TMF is the one that we're looking at. And definitely, I do have the drip on PNT. I meant to turn it off, to be honest, man. And I don't think I did. So I know they're paying this week, I believe. So I'll probably sell those shares and buy something else. I meant to turn it off. It's fair value, keeps going higher, but fuck, dude, part of me says, who gives a fuck? Just let it drip, man. Just get more shares so that way next time it goes down, we'll have more shares to get more shares, right? I mean, so nothing wrong with dripping them. It's hard to go wrong with that. I meant to turn it off though. So I think my dividend, it's getting up there, 200 and something. 200 and something, man, is what my dividend's been. This stock has been amazing. This one we've been in since COVID days, and I mean pre-COVID days. I was in it way before it, and it fell from, at the time it was like $6-7, fell all the way to like $1.50. And here's the crazy thing: during COVID, it did not stop paying its dividend, and the dividend yield was 10% up here. Fucking yield was like 30-40 down there, and they were buying me shares. And when they would pay me the dividend, it literally bought 100 shares. It's crazy. And then now it's all the way back to $7. So those shares that they bought me for, $2, that got me 100 shares for $2. Well, look, they're now 795. So the position has grown astronomical. I mean, I got like, I think $500 or $600 during this time in dividends that bought 100 shares a pop. Boom, boom, boom. And then it ran up. So that, as far as a dividend crunching machine, PNT in its short window that I've owned it has been amazing. Dude, why do you keep asking how many years you've been trading for? A long time, dude. Like 20 years. Yeah, PNT is good. All right, man. You guys be good. Appreciate you.
I know you see that crypto and stocks running. Be a consistent trader. What's my favorite?